Well, the Federal Reserve has spoken, but what does it mean for you and your fellow consumers and all of us? How will it affect those of you shopping for a mortgage, looking to take out a car loan, or stashing your money in a savings account? With me now, Edelman Financial Services Vice Chair in charge of Vice, David Bach, it's good to see you. Great to have you
Gerri,
back on the show. So, look, this is a big deal for consumers. People talk about interest rates as if it's just a market story. It's all about stocks. It's not about stocks. It's about me and you.
No, I mean, in the real world, back in the green room, I just got asked, I'm looking to buy a house. And should I buy that house in the next 6 months because I want to lock in these rates? And the answer is yes. If you're looking to buy a home right now or finance a car or borrow money, now is the time to do it because the rates are still very low, and they are going to go up.
So we've got 3.8% on a 30-year fixed rate. Last year, this time, 4.3%. So you can see what's gone on. Listen, everybody and their mother said that rates were going to go through to the sky. They have not. They've actually gone down. So now is a good time. Also
very important for investors right now, especially if you're planning for retirement, because a lot of investors have long-term bonds in their portfolio. And when rates go up, those bond prices are going to come down. For our clients, we've been repositioning those long-term bonds to short-term and intermediate-term bonds. So you really want to review those bond portfolios, especially in your 401k plans and your IRA accounts, because they will get hit as rates go up.
I appreciate that, and we talk a lot about that on the show. I want to get back to consumer interest rates for a second, though, because when rates finally do go up, your credit cards are going to become more expensive.
They are going to become more expensive. But look, there's always good news in all this stuff, too, right? Rates will go up for credit cards, but guess what? Rates will go up for savings. So the savings rates right now in checking accounts are about 0.5%.
Not even.
Not, well, but 0.044. We're going to see interest rates go up finally in money market accounts and CDs and in short-term savings. So that's going to be good for a lot of people who are looking to get a higher rate on that savings money.
Yeah, if you don't want to take any risk at all, maybe you're already in retirement and you've got a lot of savings vehicles. This is good news for you. My question, though, is, and you've got a really good perspective on this, how quickly can rates rise? Because we've seen times when they've risen extremely quickly, other times they don't. And I think people don't understand it's just not the Fed that sets rates, it's the market.
Well, that's right. And realistically, we expect rates to go up slowly. But we'll have to wait and see because so much of this is geared on the economy, on the employment numbers and inflation. We've seen there have been cases where inflation takes off and the Fed starts to raise rates quickly. So, look, this is a wait and see thing. We've been discussing this for years. The good news right now, and the market certainly liked it this week, is rates have not gone up. And so the markets really like that.
Okay, we've got a couple more topics here for you, mister, because we put them all together to give them to you when you do come. So, story out about how people are using their savings from gas prices to pay down debt, which I would think is a good thing, and also to pay those rising grocery costs.
Well, it's interesting because there's all these people saying, oh, no, people are getting all the savings. We're talking hundreds of millions of dollars in savings because of gas prices. They're not rushing out and spending the money. You're exactly right. What they're doing is paying down credit card debt and putting it towards savings. So, I always talk about the recession was a reset. Americans got smart, and Americans are actually doing with this money right now what they should be doing. What us financial planners are constantly saying, take this money, pay down your debt, and save.
All right. Okay, one other topic here. University of California President Janet Napolitano, off mic, the woman made a big mistake. So at that, let me just set this up a little bit more here, because what's happening at that university is that tuition is going up about 5% a year. And students there are on fire. Now, California's typically been pretty cheap because it's state schools and they've always had cheap tuitions. But she got a little upset at some protesters, David Bach. I want you to hear this.
What? What? Let's go. We don't have to listen to this.
Don't have to listen to this crap. And what you heard in the background there, David, those are students protesting the tuition rises. Now, I think these people deserve a voice. What do you say?
They do deserve a voice. And she really got caught because what happened there is in the beginning she was saying they need a voice. And then at the end she was saying we don't need to listen to this. So here's the deal. We got $1.3 trillion right now in student loans. It's worse than credit card debt.
Yeah.
These poor kids are getting out of school with up to $30,000 in student loans. It's crushing them. It's preventing families from saving for retirement. It's a big deal. And I quite frankly think she was tone deaf here. Because when we talk to people right now who are saving for college, they're really fearful. How am I going to pay for this? The average cost right now for school, for that school that we're talking about, you're looking in excess of $15,000 a year, not including housing, not including books, up to $132,000 for 4 years for that inexpensive education. It's really expensive, if you ask me.
Yeah, these people need help. They don't need derision, and that's exactly what they got from Napolitano. Unbelievable. And by the way, she came out later and apologized, and the way she apologized was amazing to me. She said she doesn't like to be quoted using that kind of language. So she didn't apologize for the sentiment. She apologized for saying crap. David Bach, good to see you.
Gerri, good to see you.